right. Good morning, everyone. Okay, good morning, everybody. Welcome to the market color of the 18th of July, 2024. My name is Abigail, and I'm going to be looking at some commodity currency pairs. Good morning, Mr. Olani Afiz. How are you today, sir? Please, if you can see me and you can hear me and also see my screen, just drop an emoji for me in the chat box so I know we are together. Can you see me? Can you hear me? All right. Thank you so much, Mr. Olani. Thank you so much. Okay, so we're going to be quickly doing this analysis, but I see that there are only 7 people on this call. So before we proceed, I would like to ask that we please share this link with more people, more traders, more want-to-be traders, more trading, the financial market enthusiasts, so they get to join this market color and see how we're able to tell the story of what is happening. So please, just 30 seconds, we're going to be waiting. Share the link, share the link, share the link, so we can proceed with more people on board. All right, so we're going to proceed with those of us that are online now, and eventually more people are going to join, right? So AUD USD, starting off from AUD USD as usual. What exactly are we seeing on this pair? Starting from the H4 time frame, zoom in. For those of us who have not joined before and you're wondering what all the lines are on your charts, these are indicators, right? So it's just one of the multiple strategies that we have here at Value Flow Trading. And this is the strategy that I predominantly use when trading this financial market. So this is what I'm going to be using to analyze this market, all right? Over time, you're going to understand it. And if during the process you like what you see and you want to learn how this strategy is used, you can simply send a DM and we're going to teach you, right? So for AUD/USD 4-hour time frame, what do I see? Overall structure is to the upside, right? I see AUD/USD to the upside clearly. On the 1-hour time frame now, multiple time frame analysis, what we see on the 1-hour time frame looks like a break and a retest, continue selling to sell into where? Into the trend, right? So 1-hour time frame is showing a sell based on how the all-weather indicators work. And for those of us who understand price action, and you've heard my boss speak a couple of times, you know that he always points out liquidity zones where we see price trading into. And if you're looking at price action in between, you can see diagonal liquidity around here and the fair value gap, also the resistance points that most likely will become a new support right here, right? So if AUD/USD continues selling, it most likely is going to trade into this level. But when I look at the market, I like to look at the upside liquidity and the downside liquidity as well. I try to stay as flexible as possible. So if I'm looking at the 4-hour time frame now, where is the liquidity I see? There's an high right here, which AUD/USD will most likely trade into as well. Right? But the 1-hour time frame rather is showing us a move downward. So I've seen H4, I've seen H1. The next time frame I go to is the 5-minute time frame. And on this time frame, I try to look for specific points of interest that I'm either going to continue selling what the 1 hour is doing or wait for price to get into those POIs for me to now continue trading along with what I'm seeing. Right, so on 5-minute time frame now, this is showing something different. It's giving us an entry for a buy, right? You see price has broken above, it has gone into the trend, come back to retest. So the 5-minute time frame is not in confluence with the 1 hour time frame yet. So two things I could do here: either wait for price to be in confluence with what I'm seeing on the 1 hour time frame, and then I take advantage of that trend, or look for the most likely place where price is going to trade into, and then for me to also trade along with that. But from what I'm seeing on the AUD USD 5-minute time frame, this is not clear. So I'm going to be waiting for price to coincide and be in confluence with the 1 hour time frame before I do anything on this guy. If you follow fundamentals as well, you know that AUD employment data came out this morning, and it came out way higher than expected. Let's quickly look at that. It came out way higher than expected. Right, where is it? Today is a Thursday, right? Yeah. So employment change, what was forecasted was 19.9K, came out at 50,000. So we're seeing more strength for the Aussie. We're seeing more strength for the Aussie. So, price is also fractal. So since 5-minute time frame is showing us buys, most likely we'll keep buying, and then the 1 hour time frame will eventually catch up, right? So we've seen fundamentals. It's more strength for the Aussie based on what we're seeing right now. It's more strength for the Aussie. So this buy might just be valid. So let's see 1 hour time frame and see the most likely area it's going to buy into. But before I get interested in taking this buy, I want to see price break above this level, break above these resistance levels that I marked on the 5-minute time frame. I'm going to go back so you see it's these levels. So if price trades above this and breaks above these two levels, and I see structure respecting what fundamentals are doing, I most likely will be buying AUD USD. But for now, I'm going to be watching closely for price to catch up with what the news release gave, right? It's already catching up. You're seeing the buys on 5 minutes time frame. So we're done with Aussie. Let's look at NZD/USD. Starting from the 4-hour time frame as usual. So for the Aussie now, what we see is totally different from for the New Zealand dollar, what we see is different from what we see on the Aussie. Structure is to the downside. 1 hour time frame structure is also to the downside, right? So what do we do next? Straight to the 5-minute time frame, of course. And you see the 5-minute time frame is also in confluence with what we're seeing on the 1 hour and the 4-hour time frame. So most likely I'm going to be selling AUD NZD/USD from where it currently is, and my first TP area is going to be right here. First TP area is going to be right here. I'm going to go to the 1-minute time frame as well to look for my specific entry pattern, and you see it's a break and a retest. So this looks like a good place to short the Aussie, targeting very little, of course. Targeting very little as my first take profit, which is right here, and that's about should be 28 to 30 pips thereabout. Right, 30 pips. For where price currently is to where it's heading, 30 pips. So NZD/USD looks like it's ripe for a quick sell, unless of course price now trades above and breaks this retest and starts to trade higher. But from what I'm seeing right now, this is a good entry for a sell on the New Zealand dollar. Is a good entry for a sell. You might want to take advantage of that. Also compare it with your own entry pattern and see if you can make some money from what we're seeing right now. USD card next. What do we see on the USD card? 4-hour time frame is in a range. It's in a range. So go to 1 hour time frame to have a clearer picture, and we see USD card in a range, but to the upside. Our momentum is clearly to the upside. So 5-minute time frame to see if 5-minute time frame is also buying. And what do we see here? 5-minute time frame is changing structure to the downside. But bear in mind, I think there's a news release coming out by 1:30 on the dollar. Let me quickly switch back to Forex Factory to see the news release we have coming out by 1:30. So maybe that time, when that comes out, when that news release on the dollar comes out, we'd have a clear picture on where these guys are going. So let's see. Yeah, unemployment claims on the USD by 1:30 p.m. So we're going to be watching out for that. We're going to be watching out for that. But that's pretty much it for what we see on these pairs. My oh my. Mr. Nee, how long were you not hearing me for? Did you get the analysis that we just did? Were we together most of the time? Okay, so Pips and Lai said we have buy sunshine on H4. That's the AUD USD. Let's quickly look at that while Mr. Nini types. So yes, you see it. So on the H4 time frame, AUD USD has even found support right here, right? So if AUD USD is going to trade above, the most likely area it's trading into is here. And with the unemployment claims coming out later, with what we already have on the Aussie, the probability of AUD USD trading higher is very valid. It's very valid, right? So yeah, buy sunshine. 1 hour time frame is the only one that is not in confluence, yes, but as we always say, price is fractal. So whatever 5 minute time frame does, 1 hour, 30 minutes, 15 minutes, 1 hour will eventually catch up. Will eventually catch up. And that might just continue the 4 hour trend. What about the cable? Which cable, sir? GU. Okay. Okay, that's the first time I'm hearing that word. That's the first time I'm hearing that word in a while. All right, so GU will not be looked at today because it's only looked at when CJ is on board doing analysis. So that's when we look at GU, when CJ himself, Yodogu, is here. But when you see me, well, I'm going to be analyzing commodity currency pairs. When you see Demola Global, it's going to be looking at indices. And then when CJ is here, he looks at pound, the euro, and dollar index. All right, so this is pretty much it for this session. We're going to go on a short break, and when we're back, we're going to continue with indices, and then my boss is going to round it up with some commentaries on what we see. So if you have any questions, please let me know now before I hand over to Demola Global. Okay. All right, Mr. Constantine. I will run brief commentary on GU, CJ's. All right. So my boss just left a comment there. So when my boss comes on board, he's going to run a brief commentary on GU. CJ does GU and yen pairs, and I do Aussie and commodity pairs. Equity indexes are for Demola. All right. Okay, Mr. Constantine. So you can just add that to your own analysis and trade along with what you're seeing as well. Okay, so before I go, this is just a brief re-announcement that we're coming to Abuja next week. Next week, Wednesday, we're going to be having our ATM cash flow right there in Abuja, right? So please endeavor to be there. If you're in the city of Abuja, come for the training. Our boss himself is going to be taking the training, including myself, CJ, and maybe some other facilitators on the Trading Academy. So if you're in Abuja, ensure you're there. It's just a very small fee for the value you'll be getting. So you're going to be learning the course, you're going to be getting a bonus course on Forex, you're going to be learning a value flow model. In addition to that, you stand a chance of winning a prop account on synthetic indices. There's so much value to be gotten and so much goodies to be won, for lack of a better word. All right, so I look forward to seeing everybody there. Mr. Constantine, you're in Abuja, right? I know Mr. Constantine is our student of the ATM cash flow. So for those of you who are already students, you can do well to come and join us again, and we'll just teach everything you've already learned before and help you refresh your memory. All right, so without taking much time, I'll come if they will share money. What we're giving is money now. We're teaching you how to make money. That's as good as sharing money. So let me not take too much time. I'm going to go from here. So cheers and God bless. If you're in the city of Abuja and you want to learn a skill that can help you earn as you learn, then listen up. Now, it's a common saying that it takes an average of 3 years to learn a skill and become profitable at it. How about I share a secret with you that can help you shorten that journey and help you make consistent weekly cash flow, meaning you get to earn while you learn. Allow me to introduce you to the ATM cash flow training. This is the only trading course that can take a total beginner trader up to an intermediate level, and up to an advanced trader, taking you from basically zero to hero. This training will be starting from the 24th of July to the 26th of July, live in the city of Abuja, and we're going to have our CEO with us, Ejimi, the profitable investor. It doesn't end there. Even after the training, there's going to be weekly follow-up classes with you and facilitators of the EFT Academy to ensure your profitability. Tell me, how much better does it get? If this is something you're interested in, send us a DM and we'll get you started. If you're in the city of Abuja and you want to learn
Good morning, everyone. I believe you can hear me. Welcome back to the second part of this market color session, the London session market color. How are we doing today? It's Demola Global here, and I'll be looking to analyze indices pair. That's the US 30, NAS 100, and S&P 500. Pips don't lie. Good morning, you too. Good morning to you. I'm Demola. Don't call me US 30. Good morning. How are we doing this morning? That bro has shown me a bit of shaggy, so and now for now we are not in good talking terms. So he wants to damage my composure and steez, but that will never happen. So this morning, let's just look at US 30 and look at what we're having for the market. Sorry, my chart is taking its time to load. Okay. On daily, there's not so much on US 30 this morning. On daily time frame, US 30 has been behaving very well, right? Because we said, although it took a while before it finally aligned, but finally we are on that move, and all of our markup, all of our areas we are looking to, buy and sell off from. I mean, buying now, all of them have been, met the target. All of the target have been met so far. We said price was going to move to 0.0. It cleared it. Our next target was 2.23.6 level. It was smashed, I think, on Tuesday, and now we've currently smashed the 50% fib level. So we should see a bit of retracement from all of this movement. Now we should be expecting a kind of retracement, although it hasn't yet moved the way NAS moved during its own bullish move, right, to the upside. But we are beginning to see all of those movement, all of those alignments. Let me just quickly go to now so I explain what I'm trying to say. So this was exactly the same, excuse me, sec, okay. This was exactly the same movement that NAS had, right? The same movement. However, it has, gone to 50%, gone to minus 100% in a new place entirely, right? And we are seeing a bit of retracement right now. So I'm expecting further push from US 30 also. It just began its own rally to the upside. However, I'll not be shocked, I'll not be surprised if I begin to see a minor sell-off on US 30, a minor sell-off. What are we looking at for today? We're seeing that's giving us good fair value gaps on the daily time frame that we might most likely feel. Say 50% of the FVG. Let me clean all of this. A sec. So my most likely feel probably 50% of this FVG, and then we'll continue to the upside again. Okay. So 50% of this FVG, you might see it, filled, and then we continue to the upside. However, I have a bit of concern because we have this gap here. We have this gap on a daily time frame for that matter. This gap looks minor, but then you need to factor in all the details when you are trading in lower TF. So this gap is a bit concerning for me. We might see price even want to come as low as coming to that place, and then take out any liquidity and continue to the up direction. So this is what I'm looking at for daily time frame. Where price is now, there's no much of information for us to process any data. Let's go to H4 price is just beginning to retrace a little bit, a lot of fair value gaps, a lot of inefficiency in price. So we might see price come to this place. However, there's another block here. If this other block is not going to hold, then we should see price filling at least 50% of this fair value gap on the daily time frame. It's still the same thing on H4. Let's look at 2 hours. If there's something spectacular there, none for now, none really. And also 1 hour, nothing really, nothing really, nothing really. So it happens like this. We've been expecting this buy. I mean, we've been anticipating the buy since I think 2 weeks after Traders Bootcamp. Been shouting the buy. We're buying US 30, although the guy was ranging seriously, ranging to taking out buyers and sellers. Look at all of this drama. We broke out of this region. We entered under drama around this area, and finally we've broken out, and then we are on a very good bullish rally to the upside. So that was all on US 30 for today. There's really nothing in terms of intraday basis. I don't do lower TF, say 15 minutes, 5 minutes on US 30. I don't do that because of the way it's volatile. I need to see a lot of candlestick that will help me, make informed decision about the market. So I'm going to wait for today and even Friday. By Monday, I should get a clear picture of what the market is doing. It's a new area also now. It's a new price discovery area. So we just want to be patient to see how price is going to react in all of this area, giving us more candlesticks so that we can, make informed data with it, informed decision with it. I mean, so on NAS 100, let's quickly look on NAS. NAS 100 has violated our setup strongly, violated it very, very well. Although we knew it was going to do that because of the concern we also had. Immediately, price started doing this sweep of liquidity and giving us inducement. I was saying that I'm not really cool with this buy again, because we wanted to buy around this region. Price didn't pick our buy setup the first time. So we wanted to buy from this region. However, price, this first place, price did not pick this buy. It did for this, but this was not what we were looking at as at the time we had this setup mark out. We're looking at more of this guy tapping into this region and then continue the buy movement to the upside. We didn't see that. What did we see? Price failed to even, tap into the FVG. Rather, we saw a push to the upside, right? Another push to the upside. Now finally came. We knew that this thing might most likely invalidate. Although we saw some kind of minor rally, but it's nothing significant, because if you enter this trade, probably somewhere like me, you'll be waiting for 1:3 minimum. I mean, so we'll have most likely taken you out, except if for any 1:2. It's not really nice for what I was expecting, right? I expected price to push all the way from this region. Even if this FVG was going to be violated, this other block, this entire region was going to hold through. But it is what it is. Price violently, violated our level, our setup. So what are we looking at now on daily time frame? It is just another retracement, right? It's just another retracement. If we look at it from the bigger picture, right? This was the last swing that was formed under retracement. So we want to see price beginning to, buy from this level. This is a discount level, right? We want to see price buying from this level up to 0.0% fib level, right? Because structurally we are bullish. We are overall bullish. So we want to see that happen. And if for any reason we see this level violated, then we will start thinking about sell opportunity, right? This is the last structure that was formed. It has not been the last lower low, higher low that was formed. It has not still been violated. So we're looking at this guy remaining protected, and we look for buy opportunities from this level. On 4-hour time frame, is there anything we're looking at? Anything unique? Something unique is here. market structure and liquidity concept. Market structure and liquidity concept. There's something unique here, right? So a sweep. Let me draw it out. Although recently I've been working on another research, so I really don't really use market structure and liquidity again. I just combine it with other things, right? Oluwaseyi said profit taking on major tech stock caused the sell-off. Exactly, yes. Yes. I really don't use market structure and liquidity that much again. It's very valid and powerful concepts. But when you do a lot of research, you just tend to move. So I'm looking at this level, right? I begin to see a kind of buy on this level. So one thing that I used to confirm again, if I want to have like strong confidence, that kind of A plus kind of setup, I will want to see something like this formed, even inside here, kind of this same structure formed inside here on lower time frame. That is where lower time frame trade now makes sense, because if you check like M5 or M15 and you see something like this happening inside this box, this schematic happening inside this box, you can go you can bank on it that it's going to move, like it's going to move at least 1:3. You're going to see your 1:3 RR, and then you're out of the market eventually. So this is what I'm looking out for you for NAS 100 today. I believe we should see this play out. And if for any reason I don't see this schematic, we'll just relax a little bit and then wait patiently for the market to do its thing. There's no point rushing. This is NAS 100. If it's going to move, it's going to move. If it's not going to move, to take you out. And if you insist on stay entering, I think your bank account will say the rest of the story. Your trading account, I mean. And so this is one level I'm looking out for. I believe this should hold because this was our previous higher low that's not been broken. Fundamentally, not fundamental now. Structurally, we are bullish, right? Market has been creating a lot of higher highs and higher lows. So we should see a kind of retracement, continuation of the trend from this level, at least, if not for anything, continuation of the trend from this zone to at least this zone. At least this zone, right? At least this zone. If it's going to say you want to start selling, we should start seeing that sell-off happening from here. So even the buy is valid up until there, right? If you use a very good risk to reward, you should make significant profits from that. Let's look at 1 hour. Is there anything special? Of course, it's now more clear on 1 hour time frame, right? It's now more clearer. So this is a very good trade setup, a very good trade setup, which I believe strongly should hold. This is kind of like A plus setup, but this is what it is when it comes to US 30 and NAS 100. Over time, I've come to hold risk management very closely, because your A setup might not be A setup when the market wants to do what it wants to do. So you apply proper risk management, ensure that you don't over leverage on any of your trades, and you will be good eventually. You'll be good eventually. So guys, this is the end of today's analysis on US 30 and NAS 100. If you have any question, you can begin to type them out in the chat box. If you have any contribution, any gray area you want us to touch on, of course, do well to type it out in the chat box. And then if time permits, we're going to look into all of the questions and then give you our answers to the best of our analysis, to the best of our knowledge. All right, right about now, we'll be calling on our boss. Good morning, sir, for his commentary on the markets today. Good morning, sir.
Good morning, Demola. Good morning, Abigail. And good morning to everyone who is here on live with us. So very quickly, a fresh reminder of all the things that we look out for anytime we come to our charts. You must have your working knowledge of your entries. Our entries being basically our box pattern. What Demola just showed us now is an upside down box pattern. Upside down box pattern. right? Where you see your left shoulder, then you see your grab of liquidity below the shoulder, then you see your creation of inducement. Let's see that, Demola. Because if you just cram it as a pattern, yes, you can just cram it as a pattern. That's what he has drawn there. But it's not just about cramming it as a pattern. You must understand what you are looking for. You have the shoulder, then you have a sharp move that breaks that shoulder. That's what he's drawing there. Then you have a break of structure to the downside. Then you have the creation of an inducement, which is sometimes they call it variation, sometimes they call it railroad track, whatever it is, an inducement. Then price comes down. Then you now have a sharp move back to that shoulder, and then it comes down. Now, that inducement may be a lower low, or it may not be a lower low. It depends.
Yeah.
So you can adjust it so they can see. It may be a lower low, and it may not be a lower low. Exactly, that one there. Sometimes it may be lower, sometimes it may not be lower. Of course, if it is lower, there's a higher probability that price will collapse, because that means you have break of structure 1 and break of structure 2. But know that these are the basic concepts that we look out for, all right? Basic concepts that we look out for. Someone says, I noticed that, Afiz Olani says, I noticed that in the schematic box pattern, before or after break, there is mostly liquidity being created, which price will later clear. Definitely. When it comes to liquidity concepts, you look at where liquidity is created, because that liquidity will be consumed, especially if that liquidity takes a lot of time to be created. It will be consumed. So that liquidity that is created can be a double top, it can be a variation, it can be a railroad track. Just know that they create a liquidity level, that price will now sweep again and break down. If you notice this, what you actually see is a double sweep. Break of left shoulder, sweep, left shoulder, then a sweep. Then you have another shoulder and then another sweep, right? Left shoulder sweep. Is it called structural liquidity? When it comes to names, George Cafe, you're doing very well, sir. We're seeing you with your withdrawals. Baya, Ladabaya. What a day to start the day. What a way to start. Motivation. Anyways, back to the issue on ground. So people are quickly, who is George? Who is George? Where is George? Is it called structural liquidity? I don't know what people call it. I'm very careful to give things a name, so that let them just explain what it is, then you can call it whatever name, right? Some people call it structural liquidity. Some people call it shoulder, which is internal liquidity, sweep, which is external liquidity, another shoulder, which gives you the protected high, then another sweep. So I don't want to give it a name, right? But just understand the concept. If it now matches something you heard somewhere that they called structural liquidity, that's fine. That's fine, okay? So that's basically our entry model. When it's inverted, let's see the inverted version of it. When it is inverted, which is upside down shoulder, upside down sweep, upside down inducement, and then a grab of that inducement. So that's the upside down shoulder, that's the upside down sweep, that's a break of structure to the upside, that's the creation of liquidity, which will be swept, and then that's the return to sweep it, and then price moves up to your target. All right, so please understand this. The second thing, and I keep repeating it, is basically repetition, because profitable trading is once you have an edge, you just repeat the edge. You just repeat the edge, right? So yes, Sir George, I hear you. So that's another thing. Some of you should make sure your cameras are off. Some of you join with your cameras on, then you forget yourselves and you leave your cameras on. That's if you don't want us to see what you're doing, or you want your privacy to be respected, all right? Then after this, we now said, if you miss that liquidity sweep, or you miss your grab of inducement, you can use IFVGs. IFVGs. You use your inverted fair value gaps for your entries. Now let's look at what's happening in the markets today. As always, as a trader, you must have a basic routine. When you come to your chart, you check your calendar. So let's see what's happening on Forex Factory calendar. This is the sequence of a serious trader. You wake up early to catch the session that you want to catch. Pips Don't Lie said, I think it happened on AUD. We'll check AUD USD, but I think Abby has already done that. Yes, it happened on AUD USD. All right, so back to what we're saying, you check your calendar for that day. You look and see what's happening with the news. That will be a trigger. Is there any red folder? Is there any red folder grab? Red folder news. So we have one later today on today is Thursday, July 18th. So we have one on the euro at 115, and we have on the dollar at 130. Euro's news is very serious because it is monetary policy. Monetary policy, interest rates, yield, that's euro. Anytime you see monetary policy, get ready. Then same thing with unemployment claims at 130. So between 115 and 130, expect some volatility, right? So if you're already in trades on this pair, move your stops to break even. If you're not in trades, you may want to wait until after the news to take your trade, all right? After doing this, you now come to forexlive.com. Olani, I will answer your question. We'll come to forexlive.com to see if there's commentary we need to take note of. Are they saying anything that might interest us? Why I like Forex Live is they help us to digest fundamentals. Fundamentals can be hard to interpret. They help us to interpret it. So let's check on Forex Live. Any news that we may want to be aware of. Saying European equities look for a slight rebound after the more sluggish showing this week. Demola, do you agree that equities have been sluggish this week? So you try and see if the headlines or the news data matches what you have been seeing on the chart. Japan chief says no comment on FX moves. So you check all of that out. I'm looking at the dollar and the pound today. Majorly the dollar index versus whatever will. Okay, what are the main events for today? The highlights will be the ECB policy decision and the US jobless claims. We've already said that. So open that and see what their commentary is on it. Open that and see what their commentary is on it. Once you have seen the main events for the day and the time, you now ask yourself, okay, I'm not going to come and trade until after 1:30 today. All right, that's fine. Then if you're already in trade, you say, I'll manage my trade up until 1:30 and protect my profits, protect my position. Then you read through the news, say UK labor market is out of the way. Okay. Notable left is ECB. All right, we'll scroll. Interest rate, they say they're going to keep it the same at 3.75. All right. They're not going to do anything in July. So it's a non-event, meaning we don't expect much volatility. That's what the analysts are saying. It's going to be unchanged. So we don't expect much volatility. That means Euro will follow technicals because the fundamentals will not interrupt anything. Let's scroll. All right. So based on this, I expect the Euro to drop. Why? Because when GU got its own news yesterday, we saw GU drop. Sorry, its own monetary. What was the GU news now? Bank of England monetary policy. Yes, we saw a sharp move to the upside. Then it came back within range. And the Euro too did its own sharp move to the upside. The Euro has not come down and formed lower low like GU. Remember what I told you, that if they are all related and one of them does a very sharp move, the others will try to catch up. So now I'm ready to go to my chart. I may just check FinViz for Forex Strength to see what is leading the market today. I want to see if there's a clear bias for the dollar. What am I seeing? Dollar is in the middle of nowhere. AUD, NZD, there's nothing much going on. I can't really tell any story based on this. AUD is on one side, NZD is on the other side. That's very weird. So purely a technical day for London session. Let's go to our chart. And whilst we are getting up our chart, Olani says, what if after the break, there's no liquidity being created? Does it mean price will clear that sweep? Now, whenever liquidity has not been created, right? If I see a break of structure and there's no liquidity, so I see shoulder, then I see sweep, right? And I don't see creation of liquidity, I will drill down, narrow down to a time frame where I see liquidity being created. If I now don't see liquidity being created, I'll be looking for inverted fair value gaps. Inverted fair value gaps, because if there's a fair value gap, you may not see a creation of liquidity. All right, so let's see what the pound is doing today. Zoom in a bit. Okay, we saw a grab of liquidity and a push to the upside. What am I seeing there? That's my shoulder. That's my sweep. But I didn't see the sweep come down and close below the fair value gap. So it's looking like a flip zone. Shoulder, break of structure to the upside, and a return to that high, right? Let me see it on 1 hour. Let me see it on 1 hour. All right, that's my shoulder there. That's my break of structure. That's my shoulder, left shoulder. And that's my grab of liquidity. Then that's my inducement. Upside down left shoulder, grab of liquidity, inducement. Thank you. So based on this, what am I likely to see price do? I'm likely to see price sell all the way down about 30 pips into that break of structure. Sorry, into that liquidity, yes. And there's a fair value gap too. Then price can tap into that, and what do we see? Move higher high. So that is where I'm looking to buy. Alternatively, now for the sell, what am I seeing? If I want to take a sell, right now price is at a flip zone. However, I see a grab of liquidity. So using IFVG, inverted fair value gaps for a sell. Where was my buy, my most recent buy fair value gap? My most recent buy fair value gap. That's it on the top there. After that shoulder was taken out, all the way to the top. The sweep, exactly. That's it right there, right? So we saw a fair value gap created, then it pushed back down and closed below that fair value gap, and it looks like it's creating some sort of liquidity. So I'll draw my fair value gap there, my IFVG, inverted fair value gap. The one above it. I'll take the one above it. I'll take the one above it because that was the first fair value gap that was created. The one above it. Exactly. I pull it all the way out. So that's a fair value gap that was created, and it's looking like it's trying to engineer some liquidity. How do I know? Look at the equal highs. Look at the equal highs. So exactly, equal highs, exactly. So did that fair value gap close below that? Yes. So we may see a move to the buy side. So it will tap into that inverted fair value gap, giving me 50% Fibonacci retracement, 50% Fibonacci retracement. Draw your 50% for me, your rectangle, 50% Fibonacci. Inside that inverted fair value gap, inside there. Exactly. Please don't lie, I'll answer your question. All right, so you mark those levels all the way out, so that when price gets into exactly. All right. So do a schematic for the grab of that liquidity, where price can just tap into that liquidity. No, I'm saying for a sell. I'm showing you the conditions for a sell. Like exactly, fantastic. Tap into there and come all the way down. Fantastic. Exactly, before it now continues all the way back up. So these are the scenarios. These are the scenarios. If I'm selling, I want to see price move into that fair value gap, grab that liquidity inside the inverted fair value gap, and then come down, all the way down. If I'm selling, if I'm buying, I want to see price come all the way down. Remember, we sell high and we buy low. Now, Pips Dollar is saying, what if price doesn't clear that liquidity before buying? That's a possibility. That is a possibility. What if price doesn't clear the liquidity before buying? Well, if price doesn't clear the liquidity before buying, what that means is my entry signature now will be that I would now, so this is one schematic, right? For a sell and for a buy. Now you are saying, what if it just starts buying and going all the way up? Well, if it's going to buy and go all the way up without printing like a clear box pattern for a liquidity grab and all of that, that red fair value gap must be closed with another fair value gap that is green. I don't know if you understand what I'm trying to say. There must be an IFVG formed. I will not take a trade if I don't see a grab of liquidity. If I don't see shoulder, sweep, break of structure, I will not take that trade. The only time I will take that trade is if I see IFVG forming. So if I want to buy now, like where price is now, price just starts buying immediately to the upside. I will wait for it to close that red fair value gap. When it closes that red fair value gap to the upside with force, then I will wait to see if it retests it and then continues its move to the upside. That's the only other buy scenario. That's the only other buy scenario, meaning that that IFVG will fail. That sell IFVG will fail and be flipped, where sellers will be flipped to become buyers, right? So if you can take a screenshot of this if you want to see it, please clean this. Let me show the schematic of what I'm talking about. Clean this, let me show the schematic of what I'm talking about. Is this helping somebody or is it a bit confusing? All right, so what will I want to see? Draw that fair value gap, the red fair value gap for me. Draw it, please. The red fair value gap that we marked. You are saying we want to buy now. So if we want to buy, I will need to see a sell fair value gap closed. So that is my sell fair value gap, right? That's my sell fair value gap. Where is my shoulder? My upside down shoulder. Where is my upside down shoulder? My upside down shoulder, exactly, that's my shoulder there. Where is my sweep? Is my sweep that is happening right now. What will I want to see? I want to see a break of structure that closes above that fair value gap. Thank you. So it will now be a green fair value gap that closes above that rectangle. If it now closes above that rectangle, preferably grabbing that liquidity, that buy liquidity. Exactly. Thank you. A fair value gap that is green, that closes above that other one. It doesn't have to make a higher high. It just needs to close above it with force. Now, if it closes above it, what am I expecting to see? A pullback of 50% of that green fair value gap. A pullback of 50% of that green fair value gap. If I see a pullback of 50%, you can put the Fibonacci on that, your imaginary fair value gap. Great job, Demola. Thank you so much. Exactly. Thank you. And price now retraces back into it. It retraces back into that fair value gap. Then I'll now know that It doesn't even have to break that higher high. It doesn't have to form it doesn't have to break structure. It just needs to close, thank you, above it, then comes back into it. This will now be my narrative. 12 p.m. on the 15th, it broke a high. 12 p.m. on the 15th, it broke a high. Then it formed a flip zone. Then price came back into that flip zone to retest. Do you understand what I'm trying to say? So now the narrative I'll be using is flip zone formed between 15th, 16th, and 17th of July. Flip zone formed from 15th, 16th, 17th. So Demola just draw a high at the draw a line at the high of 12 of 15th and 16th, 15th and 16th, 15th and 16th of July. Exactly that high, exactly. That's the high. So that's my flip zone, meaning price broke structure to the upside, came back down to retest, and then it's going back up. So do you see the narrative for a buy now? The narrative for a buy is break of structure to the upside, price came back and retested that high, created liquidity, created IFVG, then I moved to the upside. Does this make sense for anyone? So you must be able to tell your narrative with clear-cut concepts, liquidity concepts, structure concepts. That's why every time I start my own analysis, I will remind you, we want to see our box pattern. If we don't see our box pattern, we want to see our IFVGs. When you see your IFVGs and your Fibonacci equilibrium, right? Then we also want to see a flip zone. What's a flip zone? Previous resistance becomes support. Previous resistance becomes support. These are the concepts I use to tell the narrative. Then, of course, you layer it with sentiment. So after all this analysis, I'll now go and check what DXY is doing. If DXY is selling, then GU has a basis to move up. So some of you need to write these concepts. I'm looking for box pattern. I'm looking for inverted fair value gap with a 50% pullback. I'm looking for flip zone where previous support gets broken and retested and turned to resistance. Then I'm combining all these structure concepts with sentiment. Then when I combine with sentiment, I use risk management. It's like price is returning to the level that started the buy that broke structure. Yes, it is. But you see that break and retest, for me, is a low probability concept compared to box pattern with inducement, IFVG. That's why you rarely talk of us saying flip zone, flip zone, flip zone. Because if I want to rank it, I'd rather take box pattern and IFVG than take flip zone. Flip zone only works in clear trends, sweet trends, not when you have not when you have like the start of a trend or when you have ranges. All right. So has this been helpful? I want to hand it over back to the guys. So this is the second scenario. Peeps don't lie. This is the second scenario. All right. Now, if I want to confirm this, I can now do this analysis on Euro USD to see if Euro USD is following the same structural pattern as GBP USD. Let's quickly see Euro USD. Is it following the similar structural pattern or it's not?
No.
Okay. Do we see the flip zone? Yes, we are seeing a flip zone. But I'm not just trading this flip zone alone. No, I don't have that level of confidence in flip zone. All right. So we remove flip zone. What else are we trying to see? Are we seeing inverted fair value gap to the downside for a sell? No, I'm not seeing any inverted fair value gap. If we can zoom in, maybe. Can we zoom in and see? No, there's no inverted fair value gap. No, there's none. We just have very tight ranges. Very, very tight ranges. Although we have a funny type of, for those of you who understand complex ICT structures, there's an inversion, that long wick that enters into the other wick. Exactly, that green, red, green. immediately after the push to the upside. That green, red, green. After the fair value gap, the massive move to the upside, there's a doji now. There's a doji.
Yes.
Not even that one. That sharp move, the major buy move.
Okay.
No, you are there. You are there. You don't need to zoom out. You are already there. That sharp candle now. Zoom in after it. Immediately that break of structure to the upside. The green
Okay.
candle after it. There's a green candle. Then there's
Okay.
a red candle. Then there's a green candle. That weak piercing wick is a form of IFVG. Is what they call hidden IFVG. I don't need to do all those heavy concepts. So you just take the low, those weeks, and do 50% of those weeks, right? But forget that one. It's not high probability. What I'm seeing here, I'm seeing a shoulder, I'm seeing a sweep, I'm seeing a break of structure to the upside, right? Then I'm seeing the creation of inducement. It's not very clear, but you can still see it. Shoulder at 1.0942, sweep after it, that broke structure to the downside, but it didn't form a fair value gap. Then it created an inducement. That may be where price wants to get to 1.0942, grab it, and then come back down. All right? So that's basically it. But don't forget these core concepts and utilize them for your analysis. How can we use AUD release to our advantage? I don't know. I truly don't know. I don't look for anything to advantage. Once I don't see a sharp move and the other is trying to catch up, I don't do that correlation. If there is news and there is a sharp move and only that pair moves, I can say there will be catch up. But once there is no clear this thing, once it's not clear, stay out. It's not compulsory. Once it's not clear, stay out. It's not compulsory. All right? That being said, I hope this has been helpful for someone. I'm still saying that GU, I still see it coming to the downside. In fact, I'm in a sell at 1.3002 with a stop at 1.30, around 1.3024 levels, right? And that's because I saw price take out the low of New York. I saw price take out the low of New York, and I think price wants to target the high of the 16th of July. Price wants to target the high of the 16th of July, which is about 1.2970 levels. All right, that's the trade I am seeing. Okay, everyone. So I am generally today, I am bullish on the dollar, and I am selling GU and EU versus the dollar. I'm also expecting USD JPY to buy. The move it did yesterday was serious, leaving so many fair value gaps that may need to be closed. So I want to see USD JPY at least touch into 156.70 levels. Over to you guys at the floor. Today's talk was much. Do I have any sentiment on gold? You see this gold bar? You see this gold is the cause of all the problems this week. Gold is the cause of all the problems. Gold is the reason why Euro USD and GU have not sold off. It's the cause of all the problems. I can tell you this categorically. I'm expecting gold to sell off, but gold wants to frustrate everybody before it sells. It wants to just frustrate everybody before it sells. So yes, you can see now it has even cleared. Exactly. That's gold. And if you check the correlated pairs to gold, they've been coming down. So for me, until I see yen basket selling, because it's only correlation I can use now to trade gold. That's a clear technical setup and it's supposed to come down. But I would like to put yen basket to interplay yen basket. I'm not going to trade gold until I see it follow what US bonds are doing and follow what the yen basket is doing. Gold is supposed to sell, but they've been manipulating it, pushing it up. Now it's looking like it's going to sell. I hope it will sell. I really hope. So I would rather buy USD JPY than sell gold. I don't know if that makes sense. You know, they're usually oppositely correlated. I would rather buy USD JPY than sell gold. Why? USD JPY is in a discount level because of the move it did yesterday. So if I see a break of structure above 156.77, then I can buy USD JPY targeting the closure of the fair value gap, at least 100 pips. That's the only trade I will see. So instead of selling gold, I will buy USD JPY. All right. So over to you guys at the floor. Does this make sense, Marvin? Please let me know. All right. So yes, I can take this sell, but gold has been misbehaving. So I'll rather do a USD JPY buy. If you see USD JPY, let's flip and see USD JPY. So do you understand the logic? As a trader, you must be asking yourself, oh, this is the move I want to take, but how do I express it? You can see USD JPY, it has done its own shoulder. It has done its own shoulder, then it has done its own sweep. And you can see so many fair value gaps. And do you see, okay, so look at shoulder. Let's look at shoulder. Look at the shoulder. Do you see the shoulder? That's the shoulder there. That's the shoulder. All the way there, that's the shoulder. Thank you. So am I seeing shoulder? Yes. What else am I seeing that may give me confidence for that buy? Another concept that I say we always talk about. Are you seeing the IFVG? Do you see the sell fair value gap? What happened immediately after there was a sell fair value gap? Thank you. Fantastic. So there was a sell fair value gap. What happened after? Please talk to me, guys. I know it's a bit boring. There is now a buy fair value gap that closed above the high. So that's an inverted fair value gap. Let's do 50% of that buy IFVG. 50%. 50%. Fibonacci. Thank you. So it now came to a discount level. Then there's also an order block there. Do you see how everything is lining up? Then there is diagonal liquidity for my take profits. See that diagonal liquidity that ends in a fair value gap from 156.60 all the way to 156.80. Draw that diagonal trend line. That slope. Thank you. Do you see that there's diagonal liquidity that terminates in a fair value gap? IFVG and IOFED. The difference between IFVG and IOFED is IFVG usually is just 3 candles. Candle number 1, candle number 2, candle number 3. Like you see red, green, green. IOFED has a lot going on in between. IOFED can be made up of 5, 7 candles, but it's still the same concept. A fair value gap to the downside, then a fair value gap that reverses. So do you see that diagonal liquidity into a fair value gap? The diagonal liquidity at the top of that diagonal liquidity is a fair value gap. Is a fair value gap. Where is it? Let's put it there now. There's a fair value gap there. Fantastic. Thank you. That should act as a magnet. Do you see that there's good risk to reward ratio? It's a lot clearer than what gold is doing. So I would rather take this trade. In fact, I am long USD JPY at 155.76. I'm long USD JPY at 155.76. I took the trade during Asia session. I hardly do Asia session, but it's a yen pair. So when I saw the move in the middle of the night, yen moving during Asia, I say, oh yeah, let's take this. All right. So my first take profit is into that fair value gap, 156.80 levels. But there's another fair value gap at 157.72. If gold sells, USD JPY should buy. Does this make sense? All right, guys. We have, as you guys have exhausted value today. Demola, well done. Over to you. So do you see the concepts? They are not There are not many concepts. It's like ingredients. Box pattern. My brother, become better than me. Forge ahead. Box pattern, inverted fair value gaps, diagonal liquidity, flip zones, that's break and retest, support becoming resistance, then sentiment analysis. All right, these are the things that I use to be cooking. Then, of course, time and price. If yen is moving in Asia, is good. These are the things you use to tell your story. Then you help yourself with good risk management and few trades so we can survive in this market and buy G-Wagon and mansion like Kine and buy G-Wagon like Dr. Pills and buy 2 Benz like Dax. Do you understand? Okay? But it will take years, oh, not immediately. I will do it without Range Rover like Habby. I said Range Rover, Rolls Royce like Habby, exactly. That's if that's what you are interested in, okay? Some of us just want to pay school fees and travel and have vacation, okay? But these guys are in motivation. They're showing you what's possible, but it will take a lot of time. And don't do it with investors' funds. And if you must do it with investors' funds, call a lawyer. Everybody will sign. So that when there's story, you call the lawyer, not after. See, whether you call lawyer or before or after, you will still call lawyer. So call lawyer before. It's better. It's better. And we don't collect cash. If you must do fund management. So they will not say you swap them. You can only defraud somebody if they paid into your account. If you didn't pay into my account, there cannot be fraud. There can only be trading incompetence. All right? God help all of us. Over to you, Demola. Thanks. Would one learn all these at the way? Answer, Demola, please answer.
Yes, of course. Okay. Can you hear me now? I believe you can hear me now. I believe you can hear me. So, like I was saying, the number is going to be attached to your question, and you're going to get a response. Just send us a DM. We're going to, get you onboarded, right? If this session was valuable, I can see your thank you. Yes, exactly. Let him know this is value. This is value. I was just looking at like, boss, you are giving these things out for free. But what can we do? So ensure you send us a DM and we get you started, we get you onboarded, right? Like my colleague has said, very, very much well, we are coming to the city of Abuja. See, if you are a student already, you are an ATM cash flow student, believe me, this edition is going to be mind-blowing, right? So you can come and join us again for a token, right? A token of 25,000. If you're a former student, you want to be present physically for that training, you can join us for a token of 25,000. You're a former student, you've enrolled already. But if you're joining online, of course, you can join for free from anywhere in the world. Canada, US, Italy, you can join for free. It's totally free for our students. You've already enrolled, say for March edition or in any of our previous edition, you can join for free online. However, if you be coming physically for the training, you just pay token of 25,000 naira. For those that want to enroll for the training, believe me, this is one of the mind-blowing things you're going to do for your finance this year, the second part of the year. Ensure you get yourself inside our room. You're going to be sitting in a room with great minds, right? Already you can see how valuable this session was. So you just make up that decision and then send us a DM. It's 150,000 for those that are joining us physically in the city of Abuja. It's 150,000. You've seen us live in class with other students, other tutors. All the tutors in BFT will be there. Of course, with boss himself. Imagine being in class in a classroom with. Okay, so this is also what I was going to say. You should do well to find yourself there. And also for online participants, it's 100,000 for online participants. You're in the UK, you're in the US, you're in Canada. Those